Hello and welcome to the Q2 presentation. My name is Rosa Stensen and together with me I have Abi Banek. The key highlights of the quarter is that we have now seen 3 consecutive quarters with revenue growth. Q2 reports 57 million compared to 39 million last year. The revenue is driven by growth both in the channel and strategic partner segment. We report gross margin of 43%, 45% if you exclude one-offs. The key highlights on the go-to-market side is that we continue the momentum with Shure. And in the quarter we signed a memorandum of understanding with Barco, as well as we continue to pursue more strategic partnerships. When it comes to Huddly C1, our audio-video AI-driven video bar, we are on track towards first customer shipment in September. When it comes to the outlook, we are adjusting the outlook to 240 to 280 million for 2025. And as of this morning, we have announced a private placement of 50 to 75 million, whereas 50 million is fully guaranteed. And to iterate on our business plan, we start and have continued to deliver our business plan, which is built up of 3 main pillars: increasing the revenue, monetizing on our products, whilst we keep strict cost control and investment. On the revenue side, we continue the momentum with Shure, which had their first end customer shipments in the quarter. We do see that the momentum will continue to grow in the coming quarters. We are of course very pleased with the partnership with Shure, and in our humble opinion believe this is one of the best bundles you can have in the market. When it comes to Barco and Huddly have had a long-standing relationship. However, as of June, we announced that we are strengthening that partnership and relationship even further. First of all, with our go-to-market efforts, we have, as of June, the entire Huddly portfolio certified on Barco ClickShare. This includes now Huddly Crew and C1. And we also agreed that we are going to continue the cooperation when it comes to the Barco Hub and Hub Pro, which are Microsoft MDAP devices that will allow Huddly customers now to enjoy the Huddly product on Android as well. And as stated, part of our strategy is to attract more strategic partner revenue, and we are in dialogue with several partners. And as of today, we are in final negotiation with a global player in that space. When we look further at the channel revenue, we see a very good growth in the 3 consecutive quarters in a row. This is mainly driven by 3 main things. In addition to have a very strong and broad partnership throughout the channel, we do have strengthened and work more strategically with some key partners such as AVI-SPL. In addition, we have gone through the ways of working and have been working more efficiently with regards to systems, processes, routines, and so on. And part of the growth is also driven by increased adoption and momentum for products such as Huddly Crew. And to iterate on the product roadmap, in 2024 we announced and came to the market with Huddly Crew, a state-of-the-art, one-of-a-kind Huddly multi-camera system that is easy to deploy and install. In 2025, we are working towards bringing the Huddly C1, a audio-video AI-driven video bar to the market. And looking into the future, we will be working further with the audio and video to expand into even larger rooms. As stated, much of the channel growth, but also the strategic partner growth, is due to Huddly Crew is getting better momentum and adoption in the market, and now starts to be a significant part of the total balance for Huddly. We are of course very pleased to see the market endorsing that product so well. And when it comes to the Huddly C1, our AI-driven video bar with 20 times the AI capabilities of our previous products. This product was launched at Infocom globally, together both with Barco and Lenovo. And it has got a great reception so far, both by end customers, distributor resellers, and industry analysts. And most importantly, we are on track for first customer shipment in September. Looking forward to what Huddly C1 is and is going to be is that we are going to be enabling the Huddly C1 hardware towards the Huddly Crew software platform. Huddly Crew is not only a camera system and hardware system, it is actually a software platform. Now we are going to be enabling the both video and audio from the C1 on as of next year. And how are we bringing the Huddly C1 to the market? We had an introduction of the product at ISE in February this year with good reception. As well, we continued that motion in Europe with our partners in Lenovo and Microsoft with a European roadshow in multiple cities. This just before we had a global launch at Infocom in June. In the second half of the year, we are going to be continuing the roadshow with Lenovo and Microsoft, expanding to more cities in Europe, but also added some key locations in the US. And we look forward to bring the product to our customers in September. And with that, Abhi, I'll give the word over to you.
Thank you very much, Rosa. So far in this presentation, we have been discussing details around sales, marketing, and products, and I will now shift gear a bit and focus on financials and operations. In our previous quarterly announcement, we shared our insights on the newly imposed US tariffs, and since then, quite a bit has changed. What we're now seeing is presented on this slide here, where we do see a 15% tariffs between EU, Norway, and the US, and 30% between China and the US. The latter is based on a trade truce, which is announced to end on the November 10th, so what will happen after that is still unknown. This obviously has an impact for us as a company, and to recap a bit, we ship our products from Poland and Norway to the US, and generally speaking, it is the US distributors who carry the cost for duty payments and shipments. As a consequence of this, we have increased the prices to the end customers, thereby protecting our own margins and preserving the margins of the distributors. Before the hike in the tariffs from 10 to 15% from August the 1st, we stocked up goods worth 8 million NOK in the US, and this number is reflected also in the Q2 revenue. Huddly seems to currently benefit from a favorable relative cost position, and the reason for that is that many of our competitors, they have their production based in Asia, in China, Malaysia, Vietnam, which generally have a higher tariff level than Europe. I will now summarize a bit our business plan, what we have done, and what we are looking forward. So as mentioned by Rosa, we have 3 strategic pillars. So the first one, growing strategic partner and channel revenue. We're seeing a quite strong momentum and growth here. In channel, very strong 3 consecutive quarters of growth. And with strategic partners, we have momentum with Shure. We added Barco as partner through an MOU in June, and we are in negotiations with another partner. In addition to that, we have strong alignment with Microsoft, which is very important for technology validation. Second, maintaining healthy gross margins. With the new C1 product, the video bar, we are changing our position from being a video provider to being a complete solution provider with both video and audio. That is a very important move for us, which will help us to preserve our margins and grow the business case going forward. Third and finally, strict cost control and disciplined investments. We implemented a cost-saving program in spring this year with annual savings of 12 million NOK. And with the tariff situation easing a bit, we do see reduced risk in comparison to what we saw just 1 or 2 quarters ago. What has changed since last time is that we do see our deferment in strategic partner revenue. So hence we have adjusted the expected revenue for 2025. We communicated previously 270 to 320 million NOK for 2025. That has now been adjusted to 240 to 280 million NOK. Gross margin changed to 45%. However, if we look at 26 and 27, we keep the revenue estimate, and I've changed the gross margin expectation to 45 to 50%. Translating this into profitability, we have an ambition to get to cash flow positive in 2026 with a healthy cash generation from 2027. As a consequence of these changes, the company has a financing need to bridge the company to cash flow positive in 2026. As a consequence of that, we this morning announced a contemplated private placement of between 50 to 75 million NOK. Of this, 50 million NOK is guaranteed. The uses from these proceeds is going to be used on continued investments in R&D, onboarding new strategic partners, expanding channel sales, and of course for general working capital requirements to support growth. On a final note on this slide, the company currently has a 55.5 million NOK in a shareholder loan, and that is due on June next year, and lenders representing 24.75 million NOK of the total, they have committed to extend their portions of the loan for 12 months into 2027. Let's now go towards the financials and discuss a bit more details here. Revenue, as communicated, was very strong in Q2. We do see a continued growth driven by both strong momentum in channel and strategic partners. Revenue was 57 million NOK in Q2, representing a 45% increase over Q2 24 and 25% increase in comparison to Q1 25. Sales to channels was very strong. That is driven by solid performance across all products, and the number also includes 8 million NOK in US stocking in anticipation of higher tariffs. Sales to strategic partners also seeing quite a strong growth here. Gradual growth of sales to Shure in addition to revenue from Microsoft and Lenovo. And we do expect to see increasing sales to strategic partners in the next coming quarters, as we are adding additional partners to our mix. Moving towards the gross margin, we had a 43% gross margin in Q2 2025. The change is mainly due to change in product mix as well as certain one-off items. The one-off items is number one related to concluding sales of a maturing product with relatively lower margins, and number two, scrapping of certain components. So if you exclude these two effects, the gross margin for Q2 was 45%. It is important to note that the change in gross margin is not driven by market-specific or supply chain-related issues, such as rising component prices or supply shortages. Looking at that first half-year basis, gross margin was 47%, which is in line with what we expect towards 27, and also an improvement versus 43% in same half-year last year. Looking at the summarized P&L statement, we have already discussed the revenue and the gross margin, so I'd like to focus now on the OpEx here. The OpEx has reduced significantly, and that is due to two changes. Number one, reduction in costs related to a cost-saving program, which was fully implemented in spring this year. And number 2, reduced costs related to employee share incentive program. So hence, both on a quarterly basis, Q2, and half-year basis, we do see a significant year-over-year reduction in losses. We talked about the C1 and the product being launched and shipped to end customers from September this year. So all of our investments into the company in R&D goes into product development such as C1, Crew, and other software enabling enhancements. So capitalized R&D for Q2 25 was 40 million NOK. That is an increase versus same quarter last year. However, it should be noted that in Q2 last year, it was a relatively high degree of maintenance. So Q2 this year has returned to a more of a normalized level. Our organization consists of, amongst others, 57 engineers with approximately 45 with extensive experience in AI, machine learning, and software development. So we're going to continue to invest into the talent, the product development capabilities to ensure that we will defend our leading technological position and to enable future revenue growth. Finally, I will now go through the cash flow statement. Cash end of June was 52 million NOK. However, we did see a significant improvement in operational cash flow. This category was minus 33 in Q4 24. It was minus 21 in Q1 25 and was reduced down to minus 18 in Q2 this year. As already communicated, due to the changes in the business plan and the need for additional financing, the company has just announced a contemplated private placement of 50 to 75 million NOK. And with that, I would like to conclude the presentation for this quarterly announcement, and we will now move on to the Q&A session where we will open up for questions from the audience.
Hello and welcome to the Q&A session. Together with us here we have Jon Øyvind Eriksen, our Chairman of the Board, Abhi Panik, CFO, and me, Rosa Stensen. First of all, I would just like to point out if you have any questions, so please type them into the chat and we will then respond to them as we go. We have the first question. Which shareholders have pre-committed to the private placement? And Jon Øyvind, I think that's a good one for you.
Yes. I'm very glad to see that the shareholders that have agreed to pre-commit in the private placement are found among Huddly's largest shareholders, board members, and the management. And of course, the complete list will be made public at a later date. I'd like to say that the fact that we already, before the launch of the private placement, see that the offering is pre-committed, that signals a long-term commitment and confidence in the company and the report that we are presenting today.
Thank you, Jon Øyvind. So, how confident is Huddly in mitigating tariff impacts when assuming end customers will absorb the price rises? How material is the US exposure in 2025, given that 56% of the revenue in 24 was in the US and 60% already in first half 25? Abhi, this is a great one for you.
Yeah, so I think there are many factors playing into this question here. So we have chosen to increase the prices to the end customers, and how they will respond to this is a bit too early to say. However, we do know that our customers, they are generally quite big B2B customers, which typically have a different behavior from more price-sensitive consumers. But whether that means that will translate into a relatively small change in demand due to change of prices, that remains to be seen. So we will of course monitor this continuously, and we might also do other changes to the price or other mechanisms depending on how the situation develops. With regards to the question 2 exposure, we do have a slightly higher sales to the US so far in this year in comparison to last year. And it's a quite good proxy, the sales, the revenue that we have to the US, which is presented in the interim report, that shows you a quite good number of our exposure to potential US tariffs.
Yes, thank you, Robbie. The third question, will there be a repair offering, Jon Øyvind?
Yes, the company may carry out a repair offering of new shares at the same price as the price in this offering. And that would be directed towards the small shareholders who are qualified to participate in this offering. Whether we will carry out the repair offering will be decided by the board later. But in order to be a qualified shareholder, you would need to then firstly hold less than 1% of the current shares in the company. And secondly, not have been allocated shares in the private placement that is taking place now. And thirdly, not be a foreign resident in a jurisdiction where taking part in the offering would require Huddly to release a prospectus, a filing or registration or similar, or otherwise be in conflict with the law of that country.
Thank you, Jon Øyvind. There's a question with regards to the shareholder loan. There is still an internal loan of 55 million Norwegian kroners on the balance sheet, with further material drawdowns soon expected. With the business now targeting cash flow positive in 2026, are there any concrete plans to convert, restructure, or reduce this loan in the near term to strengthen the capital structure? So this was actually one part of the announcement we came out with this morning, Jon Øyvind, so you can maybe elaborate.
Yes, actually, yes, there are several parts to that question. Further drawdowns are not planned. And when it comes to the actual loan, we have communicated that 24.75 million of that loans have already been committed in writing to be extended for 12 new months until June 2027. And we have still not completed all the discussions. So the final result will be announced at a later date.
Thank you. You're contemplating 50 to 75 million Norwegian kroners private placement to fund operations through a cash flow positivity. If the upper range isn't reached or cash burn exceeds expectation, is there a backup plan, such as another round or internal financing or new capital raise already considered? Or this is actually two questions in one. So
well, when it comes to cash flow, of course, our CFO would have the last word here, but we are planning for actually that in the lower end of the range, that should be sufficient to fund the company. So we haven't planned any alternative B here. We have already got a commitment in the lower range, and the transaction is launched today, so we don't know the final result, but we already know that we have succeeded in meeting the minimum targets that we have set.
Anything to add, Abhi?
Yeah, so our current business plan is to get to cash flow positive in 2026. That is what we are working on, and that is our plan. However, the future is uncertain, and of course, if there are changes to that, we will take operational implications for that.
Thank you. I will rephrase the question a bit. How is the upfront stocking in Q2 regarding tariff effect revenue in Q3 and going forward? This is where it relates to the upfront stocking for the quarter.
Yeah, so if I understood that question correctly, so we can't say anything about Q3 at the moment, so that's also a bit too early to say. Plus, we are having a quarterly announcement on the Q2 numbers, so we can get back to that when we get into the Q3 announcement.
Thank you. At which price will the private offering be set?
The private offering has a fixed price of 11 NOK. And the share price is linked to a volume-weighted share price of the share in 30 days with a discount around 11%. And this approach is quite normal for offerings in the present capital market. And I'd like to say also that you should note that the share price of 11 NOK, it represents a 10% increase compared to the share price in the last investment round. And the value creation for the shareholders who invested in the last round, it reflects the positive achievements of Huddly in 2025, which we report today.
Thank you, Jon. Let me see. And then there is a question about, compared to the large number of quarters with large losses and negative growth, 3 consecutive quarters with revenue growth can be seen as a cold comfort. Why should we believe that the positive trend will continue? Oh, I can take that question. What we see throughout 2025 with the numbers we are reporting today is that we are starting to deliver on our business plan. And the 2 revenue pillars, both on the channel and strategic partner side, we see the growth and the momentum starting to build up. This is also, as we pointed out in the presentation, Huddly Crew, the adoption of Huddly Crew is definitely supporting that growth. And now with coming with the Huddly C1 out on planned schedule in September, will even further impact the revenue in a positive way. And obviously, as well as we pointed out, we are continuing in dialogues and attracting more strategic partners and revenue going forward. So we believe that the trend is turned. Thank you. I think that's all questions we have received. So with that, if you have any additional questions, please do not hesitate to reach to us on ir@huddly.com. We will answer your questions as they come in there. And with that, I thank you for the time today and see you next time. Thank you.